Aloha, there traders. It's another beautiful trading week. Great to have you here again, whichever part of the world you're joining us from. Kenya, South Africa, Nigeria, Indonesia, Singapore. Welcome. Saubona, Karibu. It's great to have you. So this week, some of the pairs we're going to be looking at, starting with our fundamental analysis, includes the NZD USD, the AUD USD, the USD JPY, and Bitcoin. So today, Monday, today is a somewhat technical day because we do not expect any major news or economic news from the economic calendar today that could impact the markets or disturb the flow of technical analysis. So it's paradise for technical traders. Tuesday, tomorrow, we expect New Zealand's official cash rate. That's like the interest rate of the country, and the rate statement and press conference on the same day. Be on the lookout for pairs tied to the NZD, the New Zealand dollar. On Wednesday, of course, we expect the Federal Open Market Committee meeting. Okay, you want to be on the lookout for that. As far as the New Zealand's official cash rate is concerned, we might get a 25%, a 25 points basis cut. Okay, 25 basis points cut from the interest rates for New Zealand. If that happens, we might see an appreciation of the New Zealand dollar across board, which may favor um, the jobs market. Okay, depending on how the market interprets it, it's favorable for the New Zealand dollar. Now, for the open market committee meeting, the minutes are very important for Wednesday because that's when they're going to vote. And the vote counts. In there, we're going to get an insight into whether or if there's going to be a rate cut, an interest rate cut in the US in September. Now, if the minutes come out with votes indicating that more governors are in favor of a cut, then we're definitely going to get September rate cut. And if that happens, we should expect some significant volatility in the market. As for whether it's going to favor the US dollar, remains to be seen because, um, you know, treasury yields or yields are going to lessen, right? The interest rate from yields will reduce, hence, it might not be as attractive to investors. But in the longer run, so that's in the short term, you might expect a depreciation of the US dollar, but in the longer term, it would favor the US dollar. By longer term, I mean maybe going into next year. In the longer term, we should expect more jobs, better jobs report. Okay, perhaps maybe um, decreased or increased mortgage prices, increased home sales, and so on and so forth. All these could, in the long term, affect the US dollar positively. But in the short term, however, because the yields, the treasury yields will be reduced and might not be as attractive to investors who might shift their investments to gold, we might expect a brief weakening of the US dollar if the minutes points to a possible September rate cut. But then again, it remains to be seen as to how it's going to be interpreted. So be on the lookout for that for Wednesday. And then for Thursday, of course, PMI, Purchasing Managers Index. For those who've been following the Telegram channel, you know what that is already. And we expect the PMI data of the manufacturing and services sector from Europe, from the UK, and the US on Thursday. We also expect the US unemployment claims and the Philly Fed Manufacturing Index, giving us insight as to how the unemployed market or the unemployed rate is, or perhaps the number of those claiming unemployed benefits, benefits for the unemployed, and perhaps the manufacturing sector in Philadelphia, which is a huge manufacturing area in the US. The index is strong, greater than expected is good for the US dollar, and lower than expected is definitely weaker for the US dollar. Now, as a consolation, we have the Jackson Hole Symposium to hold on Thursday and Friday, where we're going to have central bankers and finance ministers and the big dogs in the finance or economic industry present at that meeting is held annually. Okay. Be on the lookout for dovish or hawkish comments from central bankers. All right. Now, for Bitcoin, of course, we know that tariff war escalations or increased global uncertainties or any form of global crisis that may affect the markets could increase the volume of transaction with Bitcoin. Okay. But more importantly, we should know that about a week to 2 weeks ago, Donald Trump signed an order directing regulators in the US to allow savings and retirement plans such as the 401k to access alternative assets and private equity investment, including cryptocurrency. In other words, it's allowing Americans to invest and dump their money in crypto if possible, especially retirement funds. This is good for Bitcoin and good for crypto in the long run. Okay, so we might see it play out, but then again, this might be a longer term thing. But in the shorter term, I'll show you what's playing out on the charts right now. And it's not here on our note board, but I should mention that the US, um, Russia, and Ukraine could not come to an agreement. There's a no deal as far as the Russia-Ukraine war is concerned. So for those who are trading gold or oil, we might expect an appreciation briefly of gold or briefly of Brent crude or the US oil. All right, let's go straight into the charts and see what plays out in the market. So this is our MetaTrader 5 platform. Okay, you can see the darker look out there, right there. We're going to start with the NZD USD. So if you look very carefully, you see that price is currently restricted by the 100-day moving average. That's the blue line right there. Okay, it's still playing around that resistance area. Um, I circled that for you very nicely, as you can see right there. Okay, and on the daily chart, we see that it's currently around a significant reaction point right now, 0.5903 over 5900. If price breaks below that significantly, we could see it test lower levels 5880 or maybe lower than that 5860. Okay. Um, on the 4 hour chart, however, after seeing price break strongly below this ascending channel, indicating that the bears are strong, indicating a strong sell signal. It seems to be consolidating by trying to attack the retest or execute a retest of the support border of the ascending channel. This guy right here. Perhaps he wants to go up there to touch and react to the support border. In that case, it would initiate a retest. Whether the retest is going to be valid or not, it remains to be seen. So I'm going to move this calendar, this rectangle right here. Okay, seems to be headed for the lower border of the channel. But after this steep downtrend, it seems to have formed a bearish flag pattern. For those who are familiar with the bearish flag pattern, indicates that in the near term, there's a possibility of price continuing to the downside. So we have a downtrend and we have an ascending channel after it, the bearish flag pattern, indicating that there's a strong possibility of price to continue downwards. So this bearish flag pattern is consolidation, brief respite of price after the steep fall. Now, my key support area is placed at 0.5929. This guy right here, if it breaks below that, then my next most likely target will be 5924. Below that, 5920. And if price goes below that, I'll be looking at 5916. And below that, 5912. And finally, 5907. My range for this pair is tight. Yeah, because of the uncertainties surrounding the rate cut right now. And at the same time, the range within the bearish flag pattern has also been quite tight. So we should also keep in mind that when the Aussie or the Kiwi moves, that's the NZD USD, they don't usually move so far. The range is usually quite minimized or small. So be on the lookout for that. If you're entering on such levels, don't be in for too long or for long targets, unless, of course, the volume increases. We see significant increase in volumes. But if price breaks above 5941, 0.5941 right here, then my next most likely target buying will be 5946. Above that, 5951, and above that, 5958. And if price heads above that, then my next most likely target will be 5963. So what's my take on the Kiwi? Of course, I favor sell positions. I favor bearish positions on the NZD USD. The trade wars seem to have calmed down. The tariff wars seem to have calmed with Donald Trump. Um, um, seeming to be more effective pertaining to these tariffs than expected. So there's good anticipation in the market. The S&P 500 is doing great, all-time highs. The Nasdaq is doing great, all-time highs. Okay, and with the U.S. Ukraine no deal happening again, the safe haven effect of the US dollar also kicks in then again into the markets. And to sum that up, the rate cut, with the impact of the rate cut, the markets could interpret that as good for the dollar, especially with the softening jobs report. All right. But let's see how that plays out. However, generally, right now, I am strongly bearish. I favor sell positions on the NZD USD, unless, of course, I see a break of key resistance points, a break above key resistance. If I see that, I'll switch my stance. All right. Next, the AUD USD. Now, the Aussie, just like the Kiwi, has been restricted by the 100-day MA, as you can see right there. Okay. Before that, maybe there's something I want to show you here. Okay, so the Aussie, just like the Kiwi, is restricted by the 100-day MA. The thick blue line you see there seems to be struggling to break above it, and it's being restricted by that right now. But a key descending channel is still quite visible on the weekly chart. Now, it's not really broken beyond the range of the descending channel yet, so that remains to be seen, right? It's not decisive yet on that front. Now, on the daily chart, however, it's moving nicely along an ascending channel, as you can see right there, going steadily upwards, the red lines. And it's also restricted by the 50-day moving average. That's the blue, the green line you see right there. Now, for me, if price breaks below the range of this significant swing low here, because there seems to be an order block level around here, with a strong price ejection, if it breaks below that, then my next most likely target in the longer term will be this 100-day moving average. Okay, will be the 100-day MA. And to be more specific, if you look at an ascending channel on the 1 hour chart, very visible right there, price has not broken below the range of the ascending channel or perhaps gone into it yet. So it creates clear opportunities for a breakout. Therefore, if price breaks above 0.6522, my next most likely target buying will be 6528, above that 6534, and above that 6540. If it goes above that, my next most likely target will be 6546. Tight ranges on this pair this week. But look, just like the Kiwi that formed a bearish flag pattern, this guy, the bearish flag pattern is not yet complete, but it's formed an ascending trend line, this red line here, after a steep trend. It's been moving very nicely along it. So if price breaks below the trend line and goes below 6504, then I'll go on scalping moves to 6500. Below that 6495, below that 6489, I'll sell to that. Of course, below that 6482. So again, just like the Kiwi, my take on this guy is I am strongly bearish. I favor sell positions. Okay? I favor sell positions on the um, NZD, the AUD USD. Next, the USD JPY. Of course, we know this guy has been moving very nicely along an ascending channel too, as can be seen right there. Let's try to switch that for you. So that's the USD JPY, moving very nicely along an ascending channel you see right there. Okay, still not broken above or below, indecisive as to that front, still playing around resistance and support levels of May 2025 and December 2024 right around here, 147.00 and the psychological level of 148.00. Okay, on the 4 hour chart, of course, we see it move very nicely along an ascending channel. This week is the week of ascending channels. So you can see that right there. Nice ascending channel, and still around key reaction points of July and June. You can see the solid yellow circles right there. So it's not broken strongly above 148.00 psychological level. and also broken strongly below. It's still trapped in between the range of both psychological levels. So, and that gives us clear breakout opportunities. Therefore, for me, if price, meanwhile, if you look at the RSI seems to be giving off slight positive divergence signals here. If you look at the red line and connect the same waves, just like that on the RSI, we see strong positive divergence play out. Okay, you see strong positive divergence. Okay, there you go. Now, if you take that out of the picture, or you consider the movement according to the RSI, there's a good chance that price could attack higher levels. So if price breaks above 147.85, then my next most likely target will be 148.02 or 148.00 psychological level. If it goes above that strongly, I'll be looking at 148.40 on a buy. If it goes above that, 148.77, and above that, 149.00 or 149.15. But if price is adventurous enough to go below 147.00 yet again significantly, then my next most likely target will be 146.68 or 146.73. If it goes below that, 146.38. So if price breaks below 146.38, then my next most likely target will revolve around 146.21.00 right here or 145.70 on a sell. What's my take on the USD JPY? It's formed a sort of bearish, bullish reversal pattern, right? I see an inverse heads and shoulder here, here, and here. Let's try to mark that. So we see, if we take this away, okay, we see an inverse heads and shoulder with a price rejection. That's the left shoulder right there. And the head, inverse heads and shoulder, head and shoulders, and then the right shoulder right there. So the neck level of my head and shoulders revolve around this guy, but we have temporary necks around here, 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 here. We see it's a significant reaction point. So because of this and because of a stabilizing dollar based on the calming tariff wars, I favor bullish positions. Okay, but I'll switch my stance if I see clear break of 146.38 on a sell, right? If I see a clear break of 146.38, if it goes below that, then my stance will switch. Okay, but if it goes below the shoulder 146.73, I could take advantage of brief sell positions to 146.38. So let's put our support right there. Let's put it at 146.80. So break below that could see price touch 146.38. And if it goes below that, I'll be playing around 146.21 or 146.00. USD JPY. Well, I'm temporarily bullish on this pair, and but I'm open to the range. I'm bullish provided it goes within the range of the ascending channel. Now the almighty Bitcoin. Now from last week, Bitcoin has captured a massive take profit levels given from the YouTube webinar, the Facebook live session, and our outlook on Telegram. Massive three take profits captured right there on Bitcoin. One, two, three, very massive. Okay, now this week, um, our double top pattern still holds true here and here. If price breaks significantly below, for me, 115K. Then I'll target 113,831 on Vestrado's platform. Okay, if it goes below 113,831, then my next most likely target will be 112,770. This guy right here. If it goes below that, then I'll look at the key support level, the main support level of 112K or 111,965. Okay, if price breaks below that, my next most likely target will be 110K or perhaps halfway in between 111K. If it goes below that, 110K. If it goes below 110K, my next most likely target selling will be 108489. That's that for Bitcoin. What's my take? I'm bearish. I favor short-term bearish positions, bearish sell positions on Bitcoin. So that's that for the weekly update, ladies and gentlemen. Thanks for joining. I'll see you again next week. As always, I'm Atomashi Bania, the Stratus Global Market Analyst. Have a good one. Bye bye.